Hey guys, welcome back to my channel, and today I am speaking at the AOA event, which is for real estate investors, and I am going to be talking to you about 5 things that real estate investors should be doing as a result of the One Big Beautiful Bill. I am going to let you know exactly the strategies you should employ, how to employ them, how to get yourself down to the 0 to 15% tax bracket. But before we jump in, I'm going to need you to like, comment, and subscribe because you can't afford to miss out on any of this wealth building information. Now, let's get after it.
A nationally recognised firm offering a full suite of services from accounting and bookkeeping to strategic tax planning and preparation. With a passion for helping others build wealth the smart way and a career full of accomplishments, please join me in giving a warm welcome to the one, to the only, Karla Dennis.
Hello, AOA. Am I mic'd up? How is everybody? I think they'll turn me on in a second. Can you guys hear me now?
Where is it?
He's going to turn me on.
Sorry. Sorry about that.
Can you guys hear me now? Hello, AOA. How is everybody? Right? Okay, I am going to sit down today. I normally don't sit down and speak, but I had a little incident. I had to get the IRS straight. They're in a body cast, and I just have this cast on. So I will sit here if that's okay with you guys. Is that okay? Yes. All right. So are you guys having a good time already? Yes. All right. So I am Karla Dennis, and we are here, and we're going to be talking about the One Big Beautiful Bill and how real estate investors can reduce their taxes as a result of that. I find it interesting that I have a whole room of people that want to talk about taxes. That is super fun for me because I am a tax girl. All right, so before we begin, I want you guys to realize one thing, and that is everybody in this room has the power to control their tax bill. You may not think it now, but I guarantee you, before you walk out of that door, you'll realize that you have the power to control your tax bill. Is that okay with you guys? If I teach you that, will I have done my job? Let me see a show of hands. Would I have done my job? Okay. All right, it's on me to make that happen. All right, so I am Karla Dennis. I am the CEO of KDA Inc. We are a full-service accounting and tax strategy firm. I have been in this industry for 30 plus years. I have been licensed for a very long time, and I'm licensed in all 50 states. I do eat and sleep income taxes. It is the only thing that I probably know extremely well. Trust me when I say that. My company has been featured in Inc. 5000 for several years in a row, and I have helped aggregate of clients save over 40 million in taxes, okay? Aggregate together, and I have served over 40,000 clients past and present. I have been featured in multimedia outlet all across the United States, and they come to me whenever they need to break down tax laws. I always like to say, why is that important to you, right? Those are my accolades. Why do you even care? Well, the reason why is I want you to know one thing. I will never say I know 100% of anything, but one thing I can guarantee you is that I can research it and figure it out. I hold a master's in taxation. I studied under tax attorneys when I graduated college, and that's the one thing I can do is figure out tax law, okay? All right, so I want you guys to realize that today, I want you guys to walk out of here, and there's a couple of things I want you guys to know. I want you to understand strategies in the One Big Beautiful Bill. I want you to understand how to reduce your taxes without fearing IRS, okay? I want you to understand that you are going to need to structure your entities for asset protection. And asset protection also leads to tax strategy. So I want you guys to be aware of the things that I want you to walk out of here with. Is that okay with you guys? But I have a question. How many of you guys fear IRS right now? Nobody in this room fears? Come on, let's be vulnerable. Let's get our hands up. How many of you guys fear IRS, right? It's all right. We're gonna deal with that today, all right? All right, so how many of you guys want to lower your tax bill permanently? Yeah. The rest of you don't? What do the rest of you guys want to do? Overpay taxes? Right? What did you say over here? You don't want to pay your taxes? You don't want to pay it either? Who said that? You don't want to pay a tip either? This is my philosophy. My philosophy is that you should pay your fair share, but only after you have used all the tax laws to reduce your tax bill. I think that is the most patriotic thing we could do, right? Is use the laws, because we are law followers. We are rule followers, right? Would you guys say that? Do you guys go on a green light? You guys do? You guys go on green lights? You guys stop on red lights? What do you guys do on yellow lights? Go? Wait, what? I thought you said you guys were rule followers. You guys are not rule followers, you guys are rule breakers in here. All right, so let's go. So let's talk about the one big beautiful bill that passed, right? So just to give you guys some background, I have been studying tax law since they had the Tax Reconciliation Act of 1986. And so since then, all these different tax laws that have come in have been an adjustment and a throwback to that particular tax law, although we've had 4 since. In the One Big Beautiful Bill Act, this is one tax law that I can tell you in the 30 years that I've been doing this that touches every aspect of every individual that is a taxpayer. Good, bad, and different. It crosses all taxpayers, okay? This 800-page bill, I read it when it was in the Senate, I read it was in the House, and then I read the final bill. So I'm going to give you guys some strategies that you guys can utilize to lower your tax bill. Whether you choose to go to your accountants and talk to your accountants about it, I'm going to empower you to do that, because these are things that you should be doing, especially if you are real estate investors. Let me see a show of hands who's real estate investors. Who owns real estate in here? Okay, that's the majority of you. Therefore, the majority of you should be using these strategies. All right, so you guys ready for that? All right, so the first strategy that I want to share with you guys is 100% bonus depreciation. That came back in the bill and it was extended. Last year, bonus depreciation dropped down to 60%. Now it's back to 100%. What does that mean for you as a real estate investor? That means that any investment you have in real estate, any new additions, any new purchases of real estate, you're probably going to be able to write off, depending on where your property is located, you're probably going to be able to write off a good 75% of that property in the year of purchase, okay? That's huge, where before, we used to have to depreciate that property over time. Therefore, that bonus depreciation is going to help you write off the majority of the cost of that real estate. Does anybody know how that's done? What that looks like? Write this down. You're going to write this down. It's called a cost segregation study. If you guys are not getting cost segregation studies done on your property, you're leaving Uncle Sam a tip. Everybody in here, cost segregation studies. Everybody in here should be looking at cost segregation studies, whether you're putting property in service today or whether you already have property that's in service. Historically, if your property has not been in service for more than 10 years, then doing a cost segregation study is going to accelerate your write-offs, okay? Make sure you write that down, because that is huge in the One Big Beautiful Bill. That's a cost segregation study, okay? The second strategy is to set up a management company. Do any of you guys have management companies currently? Let me see a show of hands. A few of you. Okay, very good. So you might be wondering, Karla, what's a management company? Why would we want to do that, right? The reason why you want to have a management company, my friends, is because if you own real estate, you want to make sure that you are classifying your real estate as a business. You want to make sure that you set up a management company so you can write off all the other deductions that you need to write off that may not be a direct correlation to your real estate, okay? For example, home office, your car, all of those other things, your computers, the other costs you incur, auxiliary to your real estate. If you have a management company, you can write off those things. You guys follow that? All right, let me see a show of hands if you guys follow that. Okay, very good. So you need to look at having a management company. The third strategy I'm going to recommend is implementing the Augusta rule. Has anybody heard of that? Let me see a show of hands if anybody's heard of the Augusta rule. Okay, a few of you. All right, so the Augusta rule is where you're able to rent out a portion of your property or all of your property, your primary residence, not your investment property, your primary residence, and receive tax-free money. Receive tax-free money, okay? You need to have a business, i.e. a management company, in order to do that. Let me give you an example of how that could work for you. Let's say that I decide that I am going to rent out a portion of my home to maybe have an event, maybe have my staff over, have a meeting at my home. I'm going to rent out a portion of that home, and I'm going to get paid for it, right? And as long as I'm getting paid for it, that money is going to be tax-free to me. Tax-free as long as I don't rent more than 14 days out of the year. You guys follow me on that? So we're all here in the LA area. A good way to use that would have been if you guys rented your homes out as a result of events. When we had the Super Bowl here, homes were renting at the top of the market. That could have been tax-free income for you, okay? You need to look into the Augusta rule. If you're not using it, you're leaving money on the table. I do not expect you to fully understand what the Augusta rule is, but what I want you to know that it's a rule, it's available to put cash in your pocket. Does that make sense to you guys? Therefore, you want to go back to whomever is helping you and ask them about the Augusta rule. And if they don't know about the Augusta rule, well, you guys know what to do, right? If they don't know about the Augusta rule. I highly suggest that you get with somebody that understands taxes for business owners and investors because you're leaving money on the table. So that is number 3. Number 4, you guys should implement advanced vehicle deductions. Advanced vehicle deductions. What does that mean? That means we're not taking actual expenses. We're not doing the standard mileage rate. We're doing an advanced strategy where we are going to lease our vehicles to our business. We're going to lease our vehicles to our business, okay? Why would you want to do that? Because you want to get tax-free income. There's a strategy for you to be able to get tax-free income on the amount of that lease at fair market value. Have anybody in here ever rented a car? Let me see a show of hands. Anybody ever rented a car, right? Only a few of you have rented a car? You guys have never rented a car? Come on. All right, some of you rented a car, right? It's kind of the same type of philosophy, except for the income is going to come to you tax-free. All right? Are you guys with me on that? Okay. How many of you guys want tax-free income? You guys don't want tax-free income over here? You guys want to pay taxes? All right, I need to ask that question again. How many of you guys want tax-free income? Tony, you don't? Tony wants to pay taxes, you guys. All right, so I want you guys to understand that, okay? All right, number 6. Is that number 5? No, oh, 5, okay. Glad you guys are keeping up. You guys are paying attention. Number 5, you guys should be implementing the qualified vehicle, the qualified business income deduction with the proper entity structuring. Qualified business income deduction with the proper entity structuring. That's 20% off the bottom line. 20%. So if you have net profit of 20 grand, that's 4,000. Right? If you have net profit of 40, that's 8,000. 20% gets deducted off the bottom line when you're using the qualified business income deduction. That was reinstated in the One Big Beautiful Bill, and it has been made permanent. Okay? How many of you guys are using that, QBID? Only a few of you? Okay. Now that you guys know, you all should be using it. If you guys are real estate investors. All right, so you guys have those 5 items written down? So now that you have those 5 items written down, the next question that I would be asking, how do I get to implement those, right? How can I use those? What is the trick that I need to know in order to use those strategies? Is that a fair question? All right, the one thing that you guys need to know to maximize those strategies is you have to get yourselves in the right tax system. You have to get yourselves in the right tax system. What do I mean by that? There are 2 tax systems that go on in this country. There's a tax system for the W-2 wage earner, the person that lacks knowledge, and then there's a tax system for the person that owns a business, okay? You can be a W-2 wage earner and have a business on the side. You can be a W-2 wage earner and an investor, which puts you in the category of a business, but you've got to make sure you realize that you are a business owner, okay? Why am I saying that? Because business owners get the ability to really use the tax code. The majority of the tax code is slated for business owners. The majority of the tax code is slated for business owners. Therefore, if you have a business, you can utilize the majority of the tax code. Are you guys following me on that? All right? The difference being having a backyard swimming pool with that much water in it, right? The water being the deductions you can take, and having an ocean field of tax deductions. That's the difference when you classify yourself as a business owner. Therefore, you want to be able to jump into that tax code. So that means that there are some steps to do that. And let me give you guys these steps, and you're going to write this down. Step 1, you got to make sure you have a business on your tax return. You got to make sure you have a business on your tax return. And when you have a business on that tax return, my friends, you want to treat that business like a business, right? You want to show up to seminars like this. Document the fact that you came to seminars like this. You know, learn about your business. Just do those things that business owners would do. Make sense? Okay. Once you do that, you want to make sure that any expense that you have has a business purpose. Any expense has a business purpose. What does that mean, Karla, have a business purpose? That means that that expense is linked to the pursuit of income. How many of you guys are in the pursuit of income? Whoa. I'm gonna ask that question again. How many of you guys are in the pursuit of income, money, dollars, profit? All right, the majority of you, right? So if you're in the pursuit of income, that means you can link that business expense to the pursuit of income. Make sense? Okay. The second thing you want to make sure you do, you got to keep proof of payments. You have to make sure you have your documentation together. if ever IRS knocks on your door, you want to have the proper documentation. The proper documentation includes the method of payment, cash, check, charge, Venmo, Zelle, however you pay, the method of payment plus, I didn't say or, I said plus the receipts. Well, Karla, IRS still wants receipts? Come on. They still want receipts. So you want to have both. Why do you want to have both? Anybody know why you want to have both? What did you say, Tony? Any other reason why you might want to have both? Anybody? Because it's the law. That's what the law says. Aren't you guys law followers? Rule followers? That's the law. So you want to have both. All right? Does that make sense? All right. And then you want to make sure that your expenses are reported properly on your tax returns, that they are reported properly, that you are using the proper categories, that the individual that is preparing your return knows the categories to utilize. That is really important. A lot of tax returns are flagged for audit because there's things on the tax return that doesn't make sense to IRS. And when IRS has a question, how does that question come to you? How do they get in touch with you to answer your questions, right? They get in touch with you by sending that audit letter. So we don't want them asking questions. Therefore, we got to make sure that the forms are filled out properly. It sounds basic, but I just want to say to you, as someone who represents clients in audits, and our firm represents for other accounting firms, a lot of these audits are triggered because the documentation and the language on the tax return is not proper. Is not proper. Some of the stuff that's going on there, like Home Depot purchases, Amazon purchases, Lowe's purchases, they need to be in the proper category. Are you guys with me on that? All right. So now do you guys understand how to get in the right tax system? Let me see a show of hands if you guys understand how to get in the right tax system. What do you need to get in the right tax system? What is your name? Dr. Miller is on point. Let's give her a hand. Dr. Miller said a business. You guys need a business, okay, to get in the right tax system, okay? I didn't say it had to be a big business. I didn't say it had to be Amazon. You just need to have a business. You guys with me? All right. All right, so now, once you have that business, which a lot of wealthy people do, why is it that wealthy people stay wealthy? What is that thing they know that we don't seem to know, right? Do you guys ever wonder that? Like, what do they do? How do they get where they are? Let me explain that to you. First of all, wealthy people, they understand what IRS does. So when I graduated college with my degree in accounting, I didn't land the coveted position going directly into a CPA firm. I took an administrative position in a tax law firm. At the time, I kind of thought, oh my goodness, I'm going to an administrative position. I got my degree in accounting. I kind of felt some sort of way about it. But as a result of going to that law firm, I learned a plethora of information that I probably would not have learned. One of the things being that there is not an emotional connection with wealthy people and IRS. They understand that IRS's job is to collect for the government. That is what they do. So they assume that IRS is going to knock on their door. It's not personal. They assume that that's their job, they're going to do it. Therefore, because they assume that IRS is going to knock on their door, they are always audit ready. They're always audit ready. What does it mean to be audit ready? Anybody know what that means? What did you say, Tanya? You say organized. Anybody else? Have your backup together. Anybody else? Your paperwork ready? Okay, let me tell you what audit ready means. Audit ready means not only do you have your receipts and your documentation, but you also have the reason why you're taking those deductions. I said that expenses have to be linked to a business purpose, that you have to be in the pursuit of income. So when you are thinking about your expenses, you want to be asking yourself, if I were audited, how does this link back to the pursuit of income? If you are prepping that tax return and that file that way from the very beginning, you're not going to have to worry about the audit. That is what we used to do at the law firm. That is still what we do in my firm, right? My clients are always going to be audit ready. If I am going to take a deduction, I need for them to know why we're taking that deduction. We want to make sure it's the law. We want to make sure it's codified, and we want to do it when we're doing it. We don't want to do it 3 years later when IRS is knocking on our door and all of a sudden we don't remember anything, our documentation has been deleted, or we can't find it, or the computer fell apart, or whatever the case may be. Because the computer is always going to break down right before the audit. I'm just going to tell you, the documentation is going to go away right before the audit. So you always want to make sure that you are audit ready. You guys follow that? All right. The second thing that you guys want to make sure of is that you guys want to make sure that you understand your rights as taxpayers. You understand your rights as taxpayers. How many of you guys understand Miranda rights? Oh, a few of you understand Miranda rights. Let me see a show of hands of those who understand Miranda rights again. And have you guys all been arrested? Because Miranda rights are what we have in the event that we get stopped by the police and are going to get arrested, right? Okay. How many of you guys know about the Taxpayer Bill of Rights, Publication 1? Okay, one person. All of us are probably going to have to file tax returns. But there is Publication 1 that talks about the Taxpayer Bill of Rights. Yet none of us in here, maybe a few, know about Publication 1. I suggest you get it, download it, IRS Publication 1. It tells you that you have the right to representation. In the event IRS knocks on your door, you have the right to be represented by someone, okay? A little bonus note to self, do not represent yourself with IRS. Why not, Karla? I have all my documentation. Because representation is more than just documentation. Allow me to give you this analogy. Let's say that you were to go to court for some issue and you were to get an attorney, right? It's not just about the documentation and discovery. The attorney knows the procedural rules, right? There's procedural rules when there is an IRS audit. And sometimes audits are won strictly based on IRS did not follow the procedural rules. Do you follow me? Therefore, you need to understand how that works. In addition, just like if you were going into a criminal issue or to court, you would get discovery. Your attorney would ask the other side what information they have, right? You want to do that too. Therefore, you want to use a FOIA, F-O-I-A, Freedom of Information Act request to request the information that IRS has on you. Does that make sense? Should you have it? Don't you want to have it? Request it so they can give you all the information, all their notes, all the gossip, all the background they have on you. You guys want to know that information. But that's in your Taxpayer Bill of Rights that none of us have, okay? Now, if you find yourself in a tax slinky because you just got yourself in one, realize that you can file Form 911, IRS Form 911. Karla, what is IRS Form 911? It's just like dialing 911 if you want the fire to come or the police to come. 911 gets taxpayer advocate involved. Taxpayer advocate. Karla, what is taxpayer advocate? It's a separate department that our tax dollars pay for. So in the event that we get into a slinky, we can get our IRS public defender, taxpayer advocate. Does that make sense to you guys? Just FYI. Knowledge is power. You guys agree? Knowledge is power. And so understanding your rights is extremely powerful. Extremely powerful. If you get an IRS audit or IRS knocks on your door and you don't have, they don't give you publication 1, that's a procedural violation. Make sure you understand your rights. If you guys understand that concept, let me see a show of hands. If you guys understand that concept. Only a few of you understand that you need to know your rights? Can we ask that question again? Do you guys think you need to know your rights in the event of an audit? Oh, you guys are gonna go to jail, and they're not even gonna read you guys your Miranda rights. You guys just gonna be in trouble. All right, so now, do you guys wonder why some taxpayers stay in the 0 to 15% tax bracket? I don't care how much money they make. They are never gonna come out of that tax bracket, okay? Do you guys wonder why that is? Do you think that they are cheating on their tax returns? Some of them might be now, they might be, but I'm willing to bet the majority of them are not. Why? Because typically high income earners like that, they're audited every single year. And I can pretty much guarantee you they're not cheating on their tax return. That's gonna be rare that they're gonna really cheat on their tax return, okay? What they're gonna do is they're going to get themselves organized. They're going to figure it out. They're going to get with people that understand the power of tax planning. They're going to get with someone that says, we're going to get you audit ready, we're going to understand the laws, and we're going to do it before the year ends. We're not going to try to do it during tax season. So I want you guys to write down these steps to strategic tax planning. The very first step to strategic tax planning, you gotta get yourselves organized. Gotta get yourselves organized. It doesn't necessarily mean you have to be on some high-end accounting program, but you have to have your books and records organized. Me personally, I still like paper. Okay, I have binders with all my documentation in it. People can say, oh, Karla, that's old school, get Dropbox, get flip-flop. I want my binders. Why do I want my binders? Because if IRS knocks on my door, I want to have my paperwork ready because the computer is going to crash the day of the audit. So have your documentation together. That's what I mean by get organized, okay? Once you get organized, somebody has to review your past tax returns. Why is that important? Allow me to give you this analogy. Let's say that you're going to the doctor, true story. I was going to the doctor for migraine headaches. I was getting these really bad headaches. The first thing the doctor asked me was, Karla, have you ever had this migraines in the past? Do you have a history of bad eyesight? Have you ever had neurological problems? They're going to ask me about my past history. If you're going to do tax planning, someone needs to be looking at your past tax returns. They're looking for nuggets to pull into the future or issues to mitigate going into the future. That's where it has to start, okay? That's one thing you have to do. What is the next thing the doctor's gonna do after they ask me those questions, right? They're going to assess my current situation. What does that look like? They're gonna take your weight, your blood, you're gonna have to do lab work, your temperature, maybe some x-rays. They're going to assess your current situation. So my question for you is, has anybody stopped and assessed your current situation this year? Do you know right now how much you would owe in taxes if you had to file your taxes right now? Okay? You should know. Why do you want to know that? Because how can we lower your tax bill if we don't even know where you are? How can the doctor treat me if she doesn't even know where I am? Maybe I'm having high blood pressure. Maybe I'm having a stroke. Who knows, right? But that's something that we need to understand. Does that make sense? All right. Once you assess your current situation, then you need to understand your vision. What do I mean by understand your vision? What I mean by that, when I was going to the doctor for the migraine headaches, and the doctor did all that lab work and drew all my blood, they came back and said, well, we can't find anything, therefore we're gonna give you a prescription with Tylenol number 99 with codeine and narcotics and so forth. I went back to the doctor and said, no, I don't want to take a prescription. I want to get rid of my headaches, but I need to get to the root cause of what's causing these headaches. That was my vision. That's what I wanted. Therefore, she said, okay, you're going to have to strip down your food, boil your chicken, get organic lettuce, and really build back up your diet. I was prepared to do that because that was my vision of what I wanted. I wanted to get rid of my headache, but I did not want to be on narcotics. Some other people may have been happy to get the prescription, but Karla wasn't going to be happy with the prescription. Therefore, let me see a show of hands of how many of you want to lower your taxes. Okay, let me see what that looks like. So the majority of you want to lower your taxes, right? But here's the thing. I can guarantee you that all of you want to lower your taxes, but you all have a different vision of what you want to get accomplished. You all have different DNA. Your DNA, how much income you make, how many properties you have, whether you're married, divorced, want to get a divorce, got kids, want to throw away your kids, whatever it is, your situation is different than your neighbor's situation, okay? Therefore, somebody needs to understand that. Because if they don't understand it, they may be able to lower your taxes a little bit, but your taxes are not going to drop and drop permanently. See, that prescription of codeine would have took my headache away for that night, but it probably wouldn't have took my headache away permanently. Do you guys follow that? Very important that somebody understands your vision. And then once they understand your vision, then and only then can they implement the right strategies for you. The right strategies. I gave you guys 5 strategies that you can use as a real estate investor. Are those the right strategies for you? Are they? Exactly. We don't know yet. They're strategies, and they're definitely doable, and they're usable, but maybe they're not the strategies for Tanya. Maybe they're the strategies for Tom. Maybe William can use all the strategies. Maybe Mike can't use any of the strategies, and we need to come up with more strategies. It's so important that whomever is going to help you do that understands what your end game is, what you're trying to accomplish. Maybe you want to transition your wealth to your children. Maybe you don't want to give it to your children. Maybe you want to donate it all to charity. Maybe you're planning a great escape from your husband, right? Because wives do that. Husbands don't know how to do that. They don't know how to plan great escapes, right? Who knows what it is, but the bottom line is it is something. That's the bottom line. Once you get all of that figured out, it is never one and done. It is never one and done. What needs to happen? We need to make sure that we are continuing the conversation. When I say continuing the conversation, that means this is a conversation we need to be having at a minimum 4 times a year. Why? Because your income is changing, laws are changing, situations change. Maybe you decided in March you wanted to get the divorce, now in September you're happily married again, right? Things change, things happen. Bottom line is, it needs to happen before December 31st. Why does it need to happen before December 31st, Karla? Because that's your year end. The heavy lifting is done between January and December for the current year. We're in August right now. We have less than 4 months to go to the end of the year. If you want to lower your taxes, you got to be working on it right now to implement those strategies. We got to stop guessing at what we should do. Because I can guarantee you there is an exact solution if you understand how to get to the solution. Does that make sense? All right, let me see a show of hands those who believe that you have the knowledge to control your tax bill, the power. Do you guys believe you have the power to control your tax bill? Okay, it's understanding how to get it done. All right, I am going to wrap it up with 2 things. Number 1, I am at booth 432. If you want to continue the conversation, stop by the booth. We can continue the conversation. Okay? That's the first thing I'm going to say to you. The second thing that I am going to say to you is I have written a book the one big tax strategy that outlines all the strategies that are useful in the one big beautiful bill, okay? I am going to see to it that you guys get that book if you fill out your consultation cards. Stop by the booth, fill out the cards, you will be able to get that book. It will be PDF to you in electronic format, okay? Just a gift that's gonna keep on giving. I highly suggest you read it because there's going to be things in there that are gonna help you. All right, outside of that, I'm gonna wrap it up with this. My name is Karla Dennis, and it is always my pleasure to speak to anybody that is willing to listen to taxes. Thank you guys for coming, and I appreciate it. Hey guys, so that is it. You now know 5 strategies that you can utilize to lower your taxes as an investor as a result of the one big beautiful bill, how not to fear IRS, and how to keep more cash in your pocket. I hope to see you next year at this wonderful event. If you have any questions, make sure you comment below and like and share this video. Bye for now.
See you next time.
See you next time.